All right. Good morning, everybody. We're going to let the room fill up. It's just after 10:30, and this is what, Ryan, maybe our eighth, ninth, 10th. I don't know. How many of these have we done so far? A lot. We do this a lot. It's good. We have a great panel today. And while our numbers continue to filter in here, we'll give everyone a chance to get connected. And, I think one of the things we're talking about across the board in our marketplace is how much things have changed and where people are coming from and how our marketplace looks right now and where it's trending towards. And we know that being here at the Cape and the Islands, most of our buyers probably aren't originally from here. They're coming from somewhere else. And so we've tried to bring in some experts today that have real world on the street perspective from some of those complementary markets, and then also a little bit of a broader real estate brokerage economic outlook in terms of what they're seeing in their markets compared to what we're seeing in our markets. So the room's starting to fill up. I know we'll get some more people in here over the next few minutes, but I do want to turn it over. We are thankful to have the support of the Cooperative Bank of Cape Cod, as we've done these for months and months and months now. And, we're used to Charlotte's face, but I know you've got a whole team that you work with. And so, Ryan, I'll turn it over to you and Charlotte and our new guest who you guys can introduce. And then we'll pick it back up with the agent perspective in a few minutes.
All right, guys. Thanks, Greg. Yeah, absolutely. And so, a quick mortgage update from the Cooperative Bank of Cape Cod. Charlotte, how are you doing?
I'm doing great, Ryan. Thanks for having me here today.
Yeah, you introduce who you brought along today. Help talk about this stuff.
Of course. So, joining us today is Shanika Rogowski. She is our Chief Residential Lending Officer, and she's overseeing the mortgage department and is a new-ish addition to the team, but has made some amazing headway and changes, and has just gotten our efficiencies super streamlined, so we're able to still effectively service everyone throughout this kind of massive volume we're seeing.
Yeah, so hey, welcome. And you started at the Cooperative Bank about a month before we went to the stay-at-home order. So how's everything been going for you and everything with your transition into the Cape Cod community and the Cooperative Bank Cape Cod?
Thank you. Thank you, Ryan, Charlotte, Greg, everyone. Yeah, I mean, it was talk about throwing me right into the fire. I started with the Coop in February, and I think I officially got 1 month under my belt before we were all 100% working remotely. So it was quite the onboarding experience. But no, all kidding aside, it has been nothing but fantastic. I'm actually, I don't live on the Cape. I'm off Cape. I'm up in the Mansfield area. If you guys know Gillette Stadium, not that any of us are visiting there now, but I live right next door. So,
Greg knows that area very well.
Oh, do you, Greg? Yeah, so, but I summer down the Cape and whatnot, so I'm very, very familiar with the Cape. And one of our initiatives was we really knew we wanted to expand. We know and love the Cape. That is our background, our stomping grounds. Cape and Islands, as you might see, my background is of Edgartown Harbor. I'm not there right now, unfortunately, but I was a couple weeks ago. So we really knew that space well, but one of the things we wanted to do is try to bridge the gap between the Cape and the mainland and see if we couldn't, grow our product line, our talent, our processes, become more efficient, fulfill more of the needs of customers both on and off Cape, because as I'm sure all of you know, a lot of the people who are buying on the Cape and Islands don't live full time on the Cape and Islands. So it's really important that we spread the knowledge of who we are, and that, we want to help buyers up in the Boston area or in Rhode Island, Connecticut, New York, wherever. We want to be able to help them get their financing on the Cape with a local lender, somebody who knows the unique features of the Cape, because there are a lot unique features in our properties down here. A lot of accessory units, a lot of guest houses, things that typically you wouldn't see in a property and certainly wouldn't be sellable on the secondary market. So yeah, so we've been putting forth a lot of initiatives to do that. You know, one of the trends that we've been seeing, because I know that's kind of the topic of the day today, is that there's a lot of jumbo financing out there. I think I heard Stephanie Ford mention earlier that, you know, people are spending money. They are not afraid to do it up in Boston and Cambridge. Well, they're not afraid to do it down the Cape either. So, you know, we are seeing tons of $1 million+ loan amounts supporting purchase prices in the, you know, $1.5 million up range. So that's something we decided we really needed to become a niche in the market with. So we have, you know, aggressively priced our jumbo loans, and we've come up with several options for those people who, you know, might not be able to buy a house because, as we all know, there's just not enough supply for the demand right now. You know, people are getting in bidding wars. People are, you know, it's crazy the stories I hear, and I'm sure you guys are all going to speak to that. But one of the things we wanted to help people is if they decided they wanted to keep their own home and renovate it. So, you know, a lot of people, you know, really are looking to upgrade their homes right now, and we can do it through a construction rehab program. We offer fixed rates, adjustable rates, all sorts of different programs that can help people, whether they're buying a house and upgrading it or keeping their house and upgrading it. So, you know, something that COVID has really brought about is the whole desire for people to want to stay in their home. They're living in their homes, they're working from their homes, vacationing from their homes, staycations. So they really want to make that place, you know, their dream home. So we've really enhanced our product line to be able to offer that. And I think those are some of the key points that makes the Cooperative Bank of Cape Cod different and unique from a lot of the other lenders.
Well, yeah, and I was going to talk about this a little later, but too is, you know, we hit a new record sales high in Barnstable County last month in August for median sales price, and I mean it's skyrocketing up in the mid 500s right now compared to usually down and around the mid 400s, and that really takes those buyers. I mean, the buyers are coming in not, you know, either having put a lot more down or, you know, going to those jumbos, right? Because they're outside now the conventional rates out here, the conventional limits out here. And so that really makes it different when you're dealing with more buyers in jumbo loans than normal.
Absolutely, Ryan. Yeah, you hit the nail on the head. So, you know, we are seeing people that are struggling with trying to get their offers accepted because of the amount of offers. So, you know, a couple of key points to kind of remember as far as us here at the Cooperative Bank of Cape Cod is that, you know, we can accommodate 45-day closings. I don't want to speak out of line. I think we've done some less than that, but
trying not to overpromise, right?
We don't want to overpromise. Yeah, we'd rather overdeliver. So, you know, we've really beefed up our operations and been able to work harder and more efficient remotely. So we've been able to accommodate shaving days off that closing time. So that can be helpful too.
And what are you guys seeing still on the refi market? Is most everyone already into a low rate, or are people still coming through the door with refis to be able to lower them? Or can you lower them now even more than you were in March? You know, where, you know, are you seeing people refining that were already in low rates?
Yeah, that's a great question. So they're still coming fast and furious. I think what happened, this is a little unique. Interest rates really haven't, from a Fed perspective, interest rates haven't really dropped since, you know, COVID in the spring. They've remained the same. But the problem is because we went into a pandemic crisis where a lot of lenders, you know, they were trying to work on their infrastructure of getting people working remotely and how are we going to do this? And then all of a sudden, people were losing jobs and on furlough. And so there was this delayed cause of refinances, even though the rates were low. Some of the lenders had them inflated because they just didn't know what to do. They didn't want the business back in the spring. But once we all got it figured out, we brought our rates down to where they really should be. And we're still seeing people refi. So you may not have seen those lower rates back in March, April, May, like you are seeing now.
And Charlotte, you know, a lot of people coming back to work, things like that. How are you guys adjusting and handling getting people back into the loans for the ones that have come back to work? What's the process?
It's actually really simple, Ryan. So if people have been laid off due to COVID and they're coming back to work and they're coming to us for financing now that they're back at work, all we would need to see prior to closing is their first pay stub. We would directly be verifying their employment with their employer to confirm they are back to work at full capacity. It's a little bit different with self-employed people whose income might have been hurt by COVID. What we're doing is taking a look back period to make sure that they're somewhat evened out to where they were in the past. So we can say, of course, COVID has affected your income. It might be a little bit low year to date, but you're back on track to be doing what you had been in the past.
So the self-employed are the trickier situations you're running into right now?
They are, self-employed has always been a little bit more labor intensive for the borrowers. So it's something that we're just preparing people for up front, a little bit more paperwork, but we're here to get people's financing secured and working with them to minimize the documents as much as we can, while still being compliant with our lending regulations.
What are you guys doing to, right now, you see it every time, right? Open houses over the weekend, a couple dozen people come through, offer accepted. What are you guys doing to compete with the cash buyers? Because there's a lot of people, as we're going to talk about, a lot of people with a lot more money coming down. And so, if you're getting a loan, you don't want that to hamper the offer. How are you guys able to kind of assure the listing agent, the seller, that it's a strong offer coming in?
The biggest part of that is certainly a solid pre-qualification letter, which we are offering at the Coop with verified credit, assets, and income prior to that buyer making the offer. And as Shanika mentioned, we're certainly meeting 45-day closing timelines. And in certain instances, if it's required to get the deal done, we're doing everything we can to accommodate 30 days as well. The biggest delay we see are the appraisals. The turn times, they're just overwhelmed with volume, just like everyone else.
Are you running into appraisal issues yet with as prices are accelerating? Are you running into a lot of ones where you're asking for second appraisals now, or just not meeting what needs to appraise at for the loan?
Interestingly, we found that trend much more in the beginning of COVID than we are right now. Currently, the appraisals are comping out for the most part. It's infrequent that we're seeing them come in low right now, just because there's so much going on. There's so many sales taking place. So many properties are going at or over asking.
Yeah, I'm hearing that all across the board, that we quite haven't had appraisal problems yet, and I think that's testament to the banks like you and the quality appraisers you're using probably on that end. Well, thank you guys so much. Any last words of wisdom for our members this month before we get you guys back? Hopefully every month or every other month, however often you guys want to come back, you're welcome to.
Ryan, there's just one thing I wanted to mention, an interesting trend. You mentioned cash buyers and how that's so much more competitive in the market. Well, we see a lot of these really high-end customers who would traditionally be cash buyers wanting a mortgage for financial planning purposes. We can do what's called delayed financing. So if someone buys cash, we can then, after they close, to be really competitive in the offer, we can help them pull some of that equity back out of the house so they can keep that money working for them in the market.
All right. Shanika and Charlotte, thank you guys so much for joining us. And Shanika, thank you so much for introducing yourself and taking the time.
Absolutely. Thank you so much for having us. Look forward to seeing you guys soon.
Guys.
And I'll just say, Ryan, Shanika, the joke earlier that most people probably missed is the Massachusetts Association of Realtors headquarters is about to move right next to Foxborough Stadium. So for those of us who volunteer at MAR, you will see us up there quite a bit at our new headquarters next year. And it's been an interesting process to try to move a headquarters in the last 6 months that we've had, but we'll have to have you stop by sometime soon.
Absolutely. Would love to. We'll have to have a COVID-safe lunch over at Patriot Place.
And so I want to run through a couple quick updates for you guys before we get into our market panel. And so a couple things, our upcoming continuing education calendar. We are running in virtual classes for the rest of this year. The restrictions on indoor gatherings just make it not feasible for us to be able to do in-person classes the rest of this year. So if you have if you have your renewal coming up by the end of the year or early next year, you need to be aware of that and know that. And some of our upcoming classes we have through September and October are listed here. As always, you can take your online CE on demand through the Massachusetts Association of Realtors on our website as well. The links are there to take pre-recorded classes. Although we are seeing a lot of people liking the live classes online versus the pre-recorded. We also, September is Realtor Safety Month. We have a session tomorrow at 9 a.m. Stay Safe, Realtor Safety for Vacation Rentals with Justin Ford of Breezeway. Encourage you to sign up for that webinar. He becomes highly regarded in that realm. And then next Tuesday at 10 a.m. is Your Safety is Non-Negotiable, the Beverly Carter story with Carl Carter. Beverly Carter, many of you may remember, is the realtor who was killed during a showing, I believe in Arkansas several years ago. Her son, Carl, has taken on the cause of realtor safety and is doing an incredible job. And so I think hearing that next Tuesday, it will be inspiring, but also a wake-up call for you guys on making sure you're staying safe doing real estate. The Massachusetts Association of Realtors is holding their broker summit next Wednesday at 9 a.m. Virtually. So you can go on our website and sign up for that. All of these things are on our calendar on our website. Another thing we're doing that I'm really excited about is Ethics Trick or Treat. So it is with Lee York, who's the immediate past chair of the NAR Professional Standards Committee. This program is just for our members. And it's Thursday, October 8th at 10 a.m. And she'll discuss the navigation of some of the common scenarios to make you a treat to work with on those tricky ethics situations you can run into at times and how to address those. Wanted to highlight our awards. Many of you might have seen the last month that we've rolled out our virtual awards videos for each of our awards winners, and want to congratulate Richard Waystack, our Realtor of the Year, Alita Azarian, our Charles F. Lockhart Distinguished Service Award recipient, Annie Hart Cool, who was awarded our Good Neighbor Award for her work with First Steps project, which is the photos that people were doing, memorizing their time in stay-at-home order, and our Affiliate of the Year with Caddick. So thank you guys, an award to those. Go to our website to see all the videos if you haven't. They're fantastically done and really highlight some of the contributions these folks are making in the business. Greg, did you have something to add there?
Yeah, and for those who are interested, tomorrow morning is the NAR Statewide Awards ceremony. It's going to be a Zoom webinar. And so some of these recipients are going to be up for awards tomorrow as well. And I encourage everybody to take part. And I will just shout out Charlotte on the call as one of our award recipients last year. So it does have a great impact on your business, and it's great to have these honorees featured tomorrow as well.
And also, CCIR was awarded 4 community grants by the Massachusetts Association of Realtors Charitable Foundation to go to organizations on the Cape Cod, Nantucket, and Martha's Vineyard. We received $2,000 to go to Champ Homes, $1,500 to the Harwich Ecumenical Council, $1,500 to the Vineyard House, and $1,000 to Assist Nantucket. So really taking our community impact of money raised by realtors for community organizations, all to touch every area of the Cape and Islands. We also are looking for board members for next year. We reformed the process. You can just submit an application today. That's the look. You don't have to do a petition. You can, but we have a new leadership development committee who's taking applications and reviewing them and talking with members and recruiting members to serve on the board to give us the best possible board directors. For the CCR board, the open seats are president-elect, treasurer, Mid-Cape director, Upper Cape director, Dukes County director, and also one I left off here, an at-large director for anyone, as we've added an at-large director to the board. Also on the CCIMLS board, we've reconstituted it, and so all the seats will be open, and that's a president, 2 directors with 2-year terms, and 2 directors with a 1-year term. Also, committee application for 2021 will open soon, so be on the lookout for that if you want to get involved in our committees for next year. Greg, did you want to touch on the board applications at all?
No, I mean, I just think like, please just reach out to me or reach out to any of us on the board. It's an amazing positive impact on your business and on your professional relationships. So let us help you get involved if you wish to be involved.
Three big things that we're seeing a lot with MLS, I just wanted to point out is that, you know, showing a coming soon, you cannot show a coming soon, no showings property, even if it's to your own clients. So what we're seeing a lot of, and we're getting a lot of reports, is buyer agents pressuring listing agents to show coming soons. Man, if it's coming soons, don't pressure them. They'll put you in on the first day the showings happen. But also do not show it even to your own clients. If you want to start showing coming soon property, make it active. Very simple activity you could do by going the MLS and making the property active. If you're not sure how to do that, call our MLS staff. They're always available to you to tell you how to do that. Contingent showings allowed is to be used when you are taking offers and showing the property. If you're not willing to show the property, not making it available to show, use contingent, no showings, or pending. You know, and so that also stops days on market as well for you, but also that's just the appropriate role of that. Do not use active and contingent showings allowed just to get buyer leads off of your listings when they're already under agreement, as we need to accurately show what is available on inventory. And then you have 24 hours in the MLS system to know that your active listing has an accepted offer. Doing that accurately portrays. You don't want to get a bunch of phone calls from agents from a property that's under agreement already. Agents don't want to waste their time calling you for a property that's under agreement. Reflecting that status accurately is the way to go. So once again, I'll pitch Flow Plan. We talked about it a lot. The last one, we've launched it since then. A new app that we made available to you where you can shoot a floor plan for $12. Feedback is it's super simple to shoot that floor plan. You can give access to photographers or assistants or homeowners or anyone else to shoot that floor plan for you. And you can also directly link it to your MLS listing within the Flow Plan app. Download the app, Android or Apple, and we can and you can go forward from there. And then I want to give a quick market update before we move into our panel of what we saw during the year. For the year, we ended August up 5% in closings and 16% in pendings. I think we'll see how that plays out over the fall to see if we end the year up or not. Condo sales did take off in August. They were 50% year-over-year increase. So be interested for Greg to talk maybe a little about why he thinks that might be the case, other than just low inventory on the single family market and there's nothing else left to buy. If that's probably it. August records, most volume ever at 463 million. Lowest inventory on record we've had. Lowest month supply on record at 2.8 months. Highest median sales price ever for Barnstable County for us at $545,000 for a single family home, as we talked about earlier. And number of pendings and solds were second highest since 2020. 2000 is what I meant to put, not 2020. Apologize for the mistype there. But the second highest months for pendings compared to June being the highest. The second highest months for solds compared to July being the highest ever. So still a hot market as we saw. Inventory is where where we spend a lot of time talking about. New listings are around what they historically are for the summer months, but I guess I see the inventory shortages due to new listings in April, where you normally had the highest listing count month, you had the lowest new listing count month, and so if you miss 700 listings there, that probably has a spillover effect. Pent up listing demands not coming on the market right now, and then you have that unprecedented market activity on top of that. The pandemic's bringing to a head decades of lack of production on the Cape. So I think outstanding questions, and Greg, you and I have kind of talked about this. for our market is, are we borrowing buyers from later this year or even from 2 to 3 years from now? And what's that effect if we're just moving people's time frame up on some levels to buy? So will we end the year up if we're borrowing buyers from November into July? What will motivate sellers to sell if price it doesn't now? Usually historically, as we get into December, that's our lowest inventory month. If we continue to drop inventory going to December, that's really going to cause problems in the marketplace and how we're going to sell. And so I think those are the outstanding market questions. If you want to wrap up, Greg, what our where we are on the Cape, and we'll be releasing our August stats this week as I'll turn it over to you to let you get in our panel.
Yeah, I mean, I think I was interviewed last week by a local media organization, and they wanted to talk about how our sales were down from last month. And I think what I said in response was, they still were the second highest of all time. So, you have to take everything with a little bit of grain of salt. And the biggest challenge that I know we're facing is, are people going to list their house? So now we have Stephanie, Wendy, and Robert. I think a lot of our stats are probably very comparable to what you're seeing in your markets. So let me just introduce the three panelists quickly. It's a treat for me to have all three of you here, just because I know all of you personally, and through various different points in my career. Those of you who know me well know that I'm an avid sailor. I love racing sailboats. And at 8 years old, there was one person I was always trying to catch, and I was never successful, and that was Wendy Ryan. She's a better sailor than I am, and I've remembered that since my early childhood, but she's also probably a better realtor than I ever was. She's a great real estate agent with William Ravis in Southport, Connecticut, and is on a team down there of some of the most well-regarded people in the industry. So welcome, Wendy, and thank you for joining us.
Thank you for having me.
And Stephanie Ford worked with me in my very first real estate office back when I was a brand new realtor in 2005, a graduate of the Massachusetts Institute of Technology, but also an expert in not only the Cambridge-Boston market, but also the suburban market. We first met in Brookline. We worked together in Newton, up in the area where I know Wendy went to college, so you know that area pretty well. But Stephanie's been engaged not only in helping people decide what they're doing in the city, but how that spills over to the suburbs that feed our market quite well. And then Robert's with the Blackstone team at Mott & Chase Sotheby's International Realty in Providence. But Robert is one of the most engaged agents I've seen in a network globally of agents who are sharing data and sharing experiences from around the country. So I know, Robert, you probably see a lot of things that are a little bit ahead of the curve on what we're seeing. So I look forward to hearing your perspective as well, because our markets are very, very similar.
Thank you for including me.
All right, so let me start. Wendy, what's the biggest difference today in the Fairfield County market compared to what you were seeing in February and what you were expecting for this year?
I don't know if I can put into words the drastic shift we have seen in our market here. Unlike you and my perspective of what your market was pre-COVID, our market pre-COVID was pretty soft. It has been in Connecticut and in Fairfield County for a while now, and that has a lot to do, I'd say, mostly with our state. Unfortunately, our taxes here are higher than some of the surrounding areas. And we saw a high in 2008, 2007, and we just have not recovered since that. And weren't even trending to increase much. And then I have to say, this COVID, especially for us, because of our access to New York City, has completely changed our market 180 degrees. We I do mostly business in a suburb of New York City that people would normally have said it's a little too far of a commute on a daily Monday through Friday, 9 to 5 commute. And now with everyone working remotely and a lot of businesses actually closing down or reducing their New York City offices, everyone seems to be working remotely, and that has basically changed our market because it's now a manageable place for people that were working in New York City to now live. And I think they found, because our market was so soft, our prices are quite reasonable for what you can get here relative to closer to New York. So we are up about 60% year over year. We're probably pretty similar as far as months of inventory. I think we're around 3 months right now. Our biggest challenge is just not having the inventory to get out to the buyers. And it's interesting though, everyone assumes that all of our demand is just people moving out of New York, and that's a big proponent of it. I think we're at about 40% of the buyers buying right now are from New York City, but 60% are still local. And that's just a shift in their needs based on now people working from home, wanting more property, wanting a pool. And like you guys, actually, somebody had mentioned prior, I think it's speeding up people's timelines in a way that we hadn't seen. I mean, buyers were always in the driver's seat in our market. It's been a buyer's market for years, and that's really shifted. And I think buyers are starting to feel a lot more pressure to make a move. So.
Perfect. Well, we'll talk about sellers in a second, but Stephanie, what's the biggest difference in the Boston market from 6 months ago to today, and how are you seeing the impact of the last 6 months play out for your buyers and sellers?
Sure. We came into 2020 looking to slightly set records over before, which is where we've been the last few years, doing slightly better than the year before. Every year is better. As COVID happened, the market completely stopped. In an urban environment, you weren't allowed to do showings, you weren't allowed to be in buildings. People were choosing, as sellers further out, to not have people in their homes. And for about 3 days, the mandate actually was no real estate. To a very strong lobby that we have as realtors, we got that turned around. We were only completely shut down for 3 days, but we started showings again. So that was around March 17th range for a few days. And things were very slow. Inventory was very low. Buyers immediately panicked. Everyone asks, is there this panic selling? Are people rampantly listing their houses? No. There is rampant panic buying. People are buying impulsively. They're buying quickly. The people who were looking before the market stopped, who had in their head, they wanted a place by September, which is our normal timeline. Maybe they'd been looking for a year already. Those people wanted a house right now. They were afraid it was going to shut down more. They were afraid inventory was going to be even lower, and they weren't having it. I need a house now. So those people, they just pulled out everything. Money from mom and dad, liquidate this, go that direction, be more flexible with what we're buying. We're moving, right? And we're going to do whatever we have to do to move. The luxury market, say over the 2 million, which had been a little bit soft the last 2 or 3 years, snapped back immediately in most locations. I'm not going to talk about like our 2 or 3 million is different from our 20 million, right? Like that's a different market. And I don't think there's been nothing happens fast there. But in the 2 million, we saw that snap back instantly where people just said, I have to have something. And what are those somethings? There were practical things. I need space. I need outdoor space. I need amenities that I can use. I need someplace that I can go because I'm at home and I'm bored. I can't go to a restaurant. I can't go outside my house without a mask. I can't do all these things, or I'm at home with these little kids and I want to throw them outside and sit on my deck and drink a cocktail. So I've got to have this bigger space. And with that, 2 different things were driving people to spend more. One is I'm not spending money on clothes, haircuts, vacations, restaurants, drinks, whatever. I'm going to spend it on my house. Everybody is leveling up. Nicer house, bigger house. Whatever held them back before and caused them to be somewhat conservative is gone. Partially out of boredom and need, and partially out of this is it's a pandemic, and hopefully, this is the biggest crisis and concern of my lifetime. And people feel that, and families across multiple generations are saying, screw whatever, we want to be together. We want to have places that we can vacation together. We want to buy the dream house, realize whatever our long-term goals were. We want to realize them now, maybe even bigger than before. And Ryan mentioned, are we pulling this demand sooner and robbing ourselves of demand that comes later? We're definitely pulling demand sooner, and whether people are going to the Cape or they're staying here or whatever, people are leveling up and they're doing what they might have done sooner or doing something that they hadn't considered doing. It's happening sooner. I really appreciate Ryan's question, because I don't think I've sat down and thought about what's that going to mean in 3 years. So I appreciate that. Did I leave out any points for you?
No, I'm sure we'll come back and circle back on some things. But
Panic
that's
buying.
great, Bruce. Yeah.
No panic
Great.
selling.
And Robert, what I love about your market is you actually have a market that is kind of a hybrid of what both Wendy and Stephanie just described. You've got an urban core that has an economy that's been moving along, and then you also have immediately next to it resort markets that people come to for leisure only. And so, what have you seen now versus what you were expecting going into this year?
Well, in Rhode Island, what we're seeing right now is a 12% increase in sales, in sales prices over last year right now. So we are seeing that buyers are coming from our major feeder market, which is always Boston and always has been Boston. We're also receiving a lot of buyers from the Washington, D.C. area, New York City, parts of Connecticut, who are looking for that urban kind of, either it's a second home or it's a primary home. In fact, I've sold about 4 or 5 homes already this spring and in early summer for people who have purchased sight unseen. So there's some desperation out there for people that are really looking for an escape. And is that escape someplace where they can be closer to family, or is it their perfect home? Are they trying to get out of New York City? I have had conversations with people in New York that while they have great apartments, they really absolutely feel trapped, and they're crying on the phone for me to help them try to find something because they're literally desperate. So we're seeing, and we've had a strong market for the past, strong sellers market for the past 4 or 5 years anyways. A lot of people coming from San Francisco, Austin, the Seattle, Portland, and Chicago. Those are our big feeder markets besides Boston. So we've got all of that happening. And then we've got all of these people that are reactionary from COVID also coming to Rhode Island. And while Providence is a city, it's still very suburban in a lot of places compared to a lot of other cities. So when it comes to Boston, we do have a little more space in a lot of the neighborhoods. It's a little more manageable. So I think a lot of people are moving down here for that. Also, our prices are ridiculously low compared to some of the neighborhoods in Cambridge or Boston. But then again, we do have those beach and those summer communities everywhere from Westerly and Weekapaug and Quanticottag and lots of other Rhode Island Indian names that people are looking for either their perfect dream house because they don't know when they're going to go on a vacation again, and perhaps they want to live in their vacation, or they're looking for that second home. So there's there are a lot of drivers in the market right now. Our homes, every home is selling unless there is something astronomically wrong with it, whether it's not turnkey or it's priced completely inappropriately. The strongest sellers market that I've seen in the business in the past 12 years. Now that makes it very difficult for buyers though, especially when we have this huge influx and we don't have, I think maybe this last month we're seeing sellers are catching up with the market where they weren't before. And so that inventory was low. But I think that buyers are, because of what's happened in the past few months, buyers have had a lot more of a challenge. They're doing crazy things to get houses. and it's not just spending more money. It's not just overbidding. It is removing contingencies. It is saying if there is an appraisal difference, we're going to make up $20,000, $50,000 of that appraisal difference, depending on what the home is. So, you know, our market is very fast paced right now. It is great for sellers. Sellers are getting more money than they've ever gotten before. We're seeing neighborhoods that in Providence that have been pretty stagnant with the prices, set records now. And it's happening all over the state. But buyers are having the most difficult time.
So
I wanted to jump in real quick and ask you, from the Boston market, I think we talked about the space in the outdoor area. Are you still seeing heavy activity in Boston City, Somerville, Cambridge type of stuff where you have the more urban markets? Or how are some of that urban market moving in the Boston area? And Wendy, on your point, your question, they're coming out of the city. Are they selling out of the city, or are they still going to do it? Like, I think a worry for all three of you guys to talk about also in our market is what happens in 2 or 3 years from now. Do they go back? Do they sell? Do we see a rash of inventory where we are and they go back to where they were? Are you guys worried about that, or what are you guys seeing with what you're, what those people are doing in the urban markets?
I can speak for myself and say that I'm not worried when people want to move back, because most of these people are going to end up selling anyways. So there's always a market for us. And Wendy can probably speak to the market after 9/11 when everybody escaped New York, and they did eventually come back too.
Yeah, I mean, I imagine that will eventually happen. We're not really foreseeing it anytime soon. And the major indicator of that is that all of these families, I guess I'm speaking specifically to like a certain demographic, but all these families, which is mostly the influx that we're having here, these people have pulled out of their private schools in New York City that they worked years and years to get into, and they're pulling them out of those private schools and getting them in private schools here. And I have heard from multiple sources, when we start seeing that, that's saying that that's a long-term plan. So I don't expect much of a slow, at least in the next 2 or 3 years. But I think we're all in uncharted territory, so it's a little bit hard to say. But that's kind of my assumption.
You specifically mentioned, Ryan, Cambridge, Somerville, Boston, and the answer is different for each of them. Cambridge is business as usual and has exceeded past sales. I think I started my last bit saying, we came into the year expecting and seeing a little bit better sales than we were seeing before, and that was chugging along until it stopped. Cambridge exceeded last year or caught up. We had a lag of 60 days maybe going into the end of May, beginning of June. Cambridge was totally back on track. Somerville had a problem before COVID, and that was that they are trying to become the most progressive rent control, affordable housing city in the country. And that started last October. And in the multifamily market, that cost those sellers $200,000 or $300,000, which is 20-30% in the end of the year last year. And that market became completely stagnant before COVID started. And that's trickling over now and impacting sales in Somerville. In Boston, Boston also has a problem in addition to COVID, and that's the demonstrations. Is there this urban flight where people aren't coming back? I don't think we see that in the way that Wendy has described. Everybody that I've talked to either they don't want to sell their city home, they want to keep it, they want to keep their toehold, they expect to be back in a couple of years. They're not leaving, they're just making their primary home someplace else for a little while until they can come back. Some of them are selling, thinking that they're going to come back bigger, that when they come back, when they're commuting again, when they're doing whatever again, that they want a bigger place in the city. Some of them are hanging on to their city place because they don't want to let go. They assume the restaurants are going to open, they'll be spending some time here, but they're primarily spending their time someplace else. So with people have kids in school, they are, for example, we're not going to grandma's little Cape house anymore. We want a big Cape house because our kids are going to stay in school where they are remote. We're going to stay in Brookline, but we're going to live on the Cape. We're going to live in Vermont. We're going to do whatever and have our kids in their same school while it's remote. And when it's not remote anymore, then we're going to figure out, you know, what we're going to do. Someone brought up 9/11 and the rental market right now, the rental market in parts of Boston, we're kind of seeing how that goes. And I would say of everything we've talked about, that's probably the most devastated or most impacted. I'm not going to go devastated yet, most impacted. And it's sort of mimicking what we saw after 9/11. You know, our vacancy for our student rentals went from 0 to 30% in the days immediately after 9/11. And because of visa issues, which we're seeing again now, people are having trouble getting visas. And I think that's, well, I won't go too much into like politics. Maybe we get a change in the fall, maybe we don't. But the visa issues after 9/11 impacted our rental market for about 3 years, where you could track where people couldn't come back. So because people are not here for school now, and maybe they can't come back, I think we're seeing the vacancies creep up on the rentals, and that's going to play out, you know, around the schools, around the medical area, and it's already playing out in the luxury rentals. You know, there's not so many 18-year-olds renting $10,000 apartments anymore, so those prices are really down.
So I guess one thing that I know we're asking here in our market, and I'll ask, and maybe I'll start with you, Robert, is right now inventory is very, very low. It probably has been for your market a little bit more than it has been maybe for Wendy's market going into this. But what's keeping your sellers off the market right now? What are they resistant to? When, you know, typically they might be listing, or they might see prices where they are, or absorption where it is. What's holding them back right now in your market?
Well, I think that uncertainty of where they're going to move to is stopping them. You know, it's a great time for sellers, terrible time for buyers. So, you know, if my sellers were to sell right now, it's because they have to, or they have a great opportunity somewhere else. Now, if they're moving from somewhere in Rhode Island to someplace else in Rhode Island, it's probably not the best time unless they're going to rent in between. But you know, I do see the market tapering off a little bit, where there's going to be a little less competition, but I don't see prices reducing at all. So if somebody sells right now, I think their biggest worry is that they're going to make a lot of money, but they're also going to spend a lot of money buying a new place.
And Wendy,
Yeah.
on
Yeah.
your side, we saw corporations leaving, right? We saw people like, I'm out, I can't stay here anymore. Has that stopped?
Yeah, that's really stopped. In fact, they're kind of starting to come back again, because these companies now want to be as close to their employees as possible. And now with the employees all moving out here, now all of our commercial offices actually out here are doing quite well versus New York City. But I would say our scenario here is exactly what Robert's describing, and that we have a bit of a backlog. You know, I have a fair amount of sellers that are dying to put their house on the market, but the problem is, unless they're going outside of our area, the scenario doesn't look great for them. They might be able to sell their house for 15-20% higher than they would have expected a year ago, but they're also buying into that same market. So it's, you know, it's kind of like, what's the upside for me, unless they really have a need to move. But that's where we're getting into trouble with the lack of inventory, is that it's preventing people from selling. So
Wendy, just send them to the Cape.
yeah. Hey, I think actually a fair amount are going there. I mean, that's where people are now moving. They're saying, okay, so we've had a place on the Cape, we have a place in Newport, we have a place in Florida. That's where a lot of the sellers are going. So they all have second houses there, and they're like, okay, I thought we were going to be, you know, kind of be in town for a lot longer, but I guess now this is our opportunity. If we're going to sell high, this is our opportunity to move. So.
And that's what I keep hearing, is these folks coming, you know, Stephanie, from your market, that are coming down here buying 6 to that what Greg and I have always said is that no man's land of $600,000 to $1 million on the Cape. They're coming down here buying that pretty easily.
That's our
and not
target.
having to get rid
Yep.
of their place where you in your market.
I'm sorry, what was the last part?
And they're not having to get rid of their place in your market to
That's
afford
right.
that down on the Cape. Because as
That's
I've
right.
always said, the Cape is unaffordable with given the Cape's wages, but it's really affordable when you look at New York City and Boston incomes.
Right. That 600 to a million is definitely an impulse buy for a lot of these people. And then some of the people I've sent down there are between the like 1 and 2.5 range, you know, where they're making a more substantial step. They're all paying cash. You know, they're not making a lot of decisions. They're just making that impulse buy, thinking like, I'll figure the rest of this out later. But I want some place to be for this summer. I want something different to be where school starts or whatever, and just quickly going and doing something.
So I've got a little bit, just to change the topic a little bit from the market, because I think all of our markets are mimicking each other a little bit, but without getting too far into, you know, inside baseball with your own brokerage structure. How have each of you adjusted, or what do you think the most successful adjustment that you've made over the last 6 months as a real estate agent has been? And I'll start maybe with you, Robert. You know, what's something that you've really focused on as an agent the last 6 months to keep your eye on the opportunities that were available?
I think my primary focus over the past few months since we started opening up, well, during you know, the COVID shutdown and then through the opening phases, is really kind of really try to connect with the buyers and sellers that we have, really build those relationships with people. I think that always opens up the you know, the opportunities, and it took some time for me and my team to really kind of hone in on marketing too. So, you know, cut back where it wasn't necessary and really create things that was a lot more important. So I think a couple of the improvements that we have industry-wide in Rhode Island now is that everybody is finally using 3D Matterport tours. So when we have those, we have people that feel comfortable and are bold enough to purchase a home without seeing it in person. Maybe they can't, maybe they have to quarantine if they come to Rhode Island for 2 weeks. Another great thing that's happening is that people are requiring an actual pre-approval or proof of funds before somebody looks at a home. You know, that seems like it's a no-brainer and should have been something we were doing the whole time, but now it's pretty much the industry standard. So things are moving much more quickly. People are serious. There's a lot less tire kickers. So those two little shifts, while little in the market, I think are a great way for us to tighten up to get things moving better.
And Stephanie, you know, I know you guys you're always in a state of evaluating where you are and how to better kind of build the new mousetrap of business. But I mean, what's one thing that you think has really propelled you over this past 6 months?
I'm not going to say that we did this well, but you know, as soon as the change happened, we both went back to working as hard as we did when we first got in the business, you know, working like 16-hour days every day, trying to keep up with the work and trying new things. Every possible marketing channel that we ever said, some reason we didn't want to do it, we're trying it because people are coming potentially from different places, different motivations. So especially video, especially able to send things to people digitally and direct mail because they're home. You know, like we're just seeing things differently. But it's more time. You know, I say on the one hand, there's no showings, but there's also no open houses. So when we had you know, when our lower price points, 500 or 600, and you're having an open house where you expect to have 100 showings, and now you cannot have an open house and choose not to, you've got to do 100 appointments for showings without a lockbox. Oh my God, we're busy. So we're struggling. I can't say we've got success there, but our sales are double last year so far. We've already doubled last year so far, right? And our season hasn't peaked yet, probably.
And Wendy, what's going on in terms of, I mean, now your team is probably one of the first big teams in the marketplace from way back. So you guys had a pretty well-oiled machine to begin with. I mean, what's a change that you guys have implemented during this past couple of months?
So I think the biggest change or ways that we're continuing to promote ourselves and our business is having the best understanding on what is going on out there and how we've adjusted negotiations and just explaining to sellers and buyers the shift we've seen in the market and really promoting the amount of transactions we've done. I mean, we've done a heck of a lot more transactions this year in this crazy market. So a lot of what we're just talking to our market about is you need to be involved in order to understand how to negotiate deals right now, because it's very, very different today than how deals were being negotiated. Everything's going to multiple offers, and sellers and buyers really need to understand how to manage those scenarios. You know, it's just, there has never been a more critical time to hire an agent and a team that knows what they're doing, that has a lot of transactions under their belt, and really can understand how to best work for them. So we've really tried to take advantage of that fact. I can't say we've done the best job as far as marketing and social media as we have in the past. And that's simply because we are so flat out. We as a team keep saying, oh God, we gotta get back to kind of our normal routine on all that. But as many people probably feel, we're so caught up in just showings and talking to clients and paperwork that I think we've gotten a little bit back on our heels when it comes to that stuff. But at the end of the day, it's just making sure the public sees, you know, how much business we're doing and how involved we are in these negotiations. So,
and I guess the only other question I'd ask to the three of you, and anyone can jump in and chime in. Now we're talking about buyers coming from places that we're not necessarily physically in, and yet we need to kind of have a sense of A, what's going on in their market, as Wendy just said, but B, you know, how to connect with them in a really impactful way. I mean, we're in the time of year where a lot of people would traditionally leave us physically, they would go somewhere else, but we need to stay engaged with them. How are you guys staying engaged with people remotely? I mean, it's just starting with your existing clients, let alone the people who don't know you yet, who you're hoping to get in front of. And anyone can kind of jump in if you have a strategy or a tip.
I make phone calls, I send cards, you know, I'm constantly connected with my clients, whether they're in town or not. But I think one of the great ways for me to keep in touch with our feeder markets is to really connect with the agents that are out there. So I've got really good connections in all of our feeder markets, and it's not just one agent, it's multiple agents wherever they're coming from. So I think that is that's a really successful way for us as a team to stay connected and have that knowledge base. If I have somebody moving from Portland, Oregon, I know enough about Portland to talk about their markets and speak to what their experience leaving is in order to buy here. And the same thing with all of our other feeder markets.
Yeah, I will just say I'm in a Facebook group with Robert, and if someone says I need help anywhere in New England, about 75 people immediately say, oh, call Robert, call Robert, call Robert. And Robert's really great. He's just like, well, no, that's not really my market. You probably want to talk to that person, but they all know to funnel through Robert first. So, I mean, I think that's something that I've noticed you do over these past couple of months, which I think we all could do as, you know, connect with other agents if we don't have the customers to connect with right now, because the agents will help feed us those relationships. Stephanie, anything from you guys? Because you have offices kind of all over the place that you could connect with.
We do. And, you know, I'm trying to both answer your question and think about our situation. Our situation is the opposite, where our people are scattered. All those places that they go to in July and August, they're there and they're not coming back, or they're at their grandparents and they're not coming back. So even when we're trying to show property to people, you know, we had somebody that wanted to size up in Brookline, but they're spending all their time in Vermont, you know, so we've got this, people are everywhere, but lots of phone calls, lots of video, sending people books, sending people gifts, really trying to make personal contact with people because, you know, not everybody wants to talk about real estate right now. And we have clients with COVID, and we have clients with family members with COVID. So while we're trying to keep in touch, we're trying to, you know, keep in mind that some people's life is really different right now too. And they're not, you know, in the crazy pace selling being normal that we are. So trying to keep that in mind and connect with them. So when their life gets more normal, we're still here and we grew the relationship.
And Wendy, anything you want to add?
I mean, nothing crazy outside of the box other than I've really tried to tap into my referral network from, you know, past clients. If they don't have a need, then make sure to kind of keep me top of mind. We still are, I don't know about all the other areas. Connecticut's actually been quite fortunate in the sense that we have kept our cases pretty low. And so a lot of our day-to-day is still happening. My daughters are they're all going to school. You know, we are members at a club in our town that was open this summer. So I'm still trying to take advantage of all of those just conversations that are going on out there. I get the sense, you know, everybody around here is talking about real estate. It just seems to be the hot topic right now because, as I had mentioned, our market has shifted so much. So any opportunity that I have to get in front of people, even if it's behind a mask, I'm still trying to do as long as it's safe. So
I guess my last question, we'll wrap up here in a minute because we're all very, very busy, but I didn't realize this until I actually got connected with all three of you. You're all on agent teams. You aren't doing this business all by yourselves. Has that, I mean, just talk a little bit about, you know, what got you to be on teams as opposed to being an individual agent, and the benefits you're seeing right now in that process.
Well, I can speak for myself and say I've never benefited from being on a team more than I do today because we're just all so flat out. I mean, I barely took a vacation all summer. I went to Maine for 4 days, and I swear it almost would have been easier if I had stayed home because I was on the phone the whole time. But considering how busy we were, and there's 3 of us managing our listings, and then we're on a larger team, it's kind of a long story, but I work directly with my clients or for my clients with 2 other people. And I mean, we were working 16-hour days, 7 days a week. So, and that was almost a natural progression that we all kind of joined forces. It wasn't so much that we had much of a need from a perspective of we need help and assistance, but now that's what it's all about. And I don't know how some of these single agents are out there even doing it right now. I mean, just because my whole life is real estate at the moment and I still have 2 people to lean on. So it's been such a huge benefit for me on a lot of levels. But
Great. Robert?
You know, I was a singular agent for a few years before I joined the team. Now I'm a partner on the team with Nelson Taylor here in Providence. But I found myself that I had a limit to my capabilities when it comes to sales and how many people I can interact with on a regular basis, along with scheduling, along with, you know, following through on transactions and everything else. When I joined the team, that lid kind of came off, and I'm able to do so much more, exponentially more, when it comes to the stuff that I like to do, which is, you know, the architecture of homes, meeting people, you know, building those relationships, and other people on my team can focus on some of the stuff that I'm not really good at, like checking boxes and on tasks and things. You know, I think the team also has a great way for people to collaborate. There is always a learning curve when it comes to real estate, and a lot of times, you know, as a real estate agent, if you're on your own, you kind of feel like you're on an island and you're learning everything through every single transaction. You're learning something new. But when you're on a team, that that synergy happens and you're learning more than you would. You're learning 5-6 times more. So it definitely, it evolves your game a lot faster.
And Stephanie, I've known you from your pre-team days to now you're.
Sorry to say pre-teen. I was like, that's aggressive.
No. But I've known you when you were a top agent in Boston and Cambridge by yourself, and then kind of as you were building your team, and how has that impacted your last 6 months with this team structure?
It's motivated me to go bigger. Not just in, I don't know how we would survive without, we're only 2 people right now. We've been bigger in the past. I don't know how we would survive at all trying to cover the business. One thing that occurred to me as people were talking is a lot of the agents that weren't incredibly successful before have gone and gotten jobs. So they're leaving the agent pool. So there's even more work for the agents that are still here, which yay, but also like we're drowning in it. But I'm going bigger with the team. I want to duplicate every person on my team so that when somebody's tired, when somebody quits, when, we have a lot of work, that we have that elasticity instead of losing a person and having a hole. So that I'm more people. Anybody want a job? Greg, could I hire you again?
No. So is there anything else that anyone wants to share for either a tidbit from your market or, or any questions? If you're in here, we have the Q&A chat box, either the chat box or the Q&A. If you have a question for any of our panelists, we will gladly read it out to them. But before we break for the day, any, crystal ball or guess for what it's going to be like if we talk to you 3 months from now?
Well, there is one question, Greg, that they can roll this into it because I think this goes into it.
Yep.
A lot of people have been talking in the industry about this LendU survey, EdU survey recently, where they say 55% of the buyers that bought since March now have remorse about their purchase. And, have you, the closings you've had, have you followed up those buyers, or are they finding that remorseful yet? And what are you going to see in the next 3 months, from that standpoint too?
It's our job as agents to really fully educate our buyers with all of their options. And if you do that, and if you build that relationship with them, instead of treating them like a transaction, treating them like a person, treating them like family, even if you could, I think that they're going to make really good decisions, and it's your job to make sure they make those good decisions. And if you do that, I think there's a lot less room for that remorse. It does happen. I can count on one hand the amount of people that in the past 10 years that feel like they didn't get a good deal after speaking with them afterwards. But I always keep in touch with my buyers and my sellers for a few months just to keep checking in to make sure things are going well, and I don't see it.
Stephanie or Wendy?
Yeah, I mean, we're not really seeing it here. We're kind of seeing the opposite, which is, thank God I found something. It's just so cutthroat to get to the closing table from a buyer's perspective these days. So I think the ones that are happiest are just the ones that ultimately get the deal and beat the others out. So we haven't seen much of that yet.
Part of my buyer presentation is to tell the client that all the advice and guidance that I'm giving you that sounds perhaps odd to you, or maybe even a little heavy-handed, is that I'm talking to the future you, the you in 5 to 10 years that's going to look back and be happy about all of this decision that you made. But right now, in these fast decisions that are being made, as you were describing, Robert, people crying, wanting a place, wanting to make a change, wanting to take a next step, they're getting the relief on the other side. And when I call my clients that either bought in the last couple of years or in the last couple of months, thank God we have a yard. Thank God we're, on the water, or we have these offices, we have this space. I love my new kitchen, whatever. They are so happy. So no remorse, not yet.
And what do you think, as Greg asked, what do you think will happen by the end of the year?
We're still growing. Like our market is still on the way up for the year.
Yeah, we've surpassed sales this past month over last year. So it's still happening. And as long as interest rates are ridiculously low, it's going to continue to happen.
Yep. Ditto here.
Yeah, I mean, I think we hope the same for our market. I think our inventory is down so low. I mean, I think we're barely over 1,000 homes left in all of Barnstable County. That we traditionally sell pretty strongly in the fall, and it's going to be hard to match some of those numbers with very little inventory on. But if the houses come on the market, we're pretty comfortable they will sell rather quickly here. And I get the sense just in talking to a lot of people that it's similar in each of your markets.
Yeah, one thing I'm thinking about is what happens, especially with all these people with money coming in, what happens to them come the winter, especially on Cape Cod, Martha's Vineyard, Nantucket, especially at the lower outer Cape and Nantucket and Martha's Vineyard where you can be more isolated. Do they go somewhere else? Like, do the buyers say keep coming and decide to go to Arizona, go to Florida, somewhere like that? Where it's not as isolated in the winter. So that's the one thing that I'm thinking about.
Our people are looking north also anyway. They're looking at the Cape at the same time they're looking in Vermont, New Hampshire, ski destinations, if you will. So, I don't know if winter will emphasize that or not. It might, because certainly for the summer, they wanted to be on the water. So, we may see more people go north instead of the Cape.
All right. Well, I want to thank each of you, and also to our sponsors from the Cape Cod Cooperative Bank who were with us earlier. This has been a lot of fun for me. I've known you all at different phases of my life. I look up to the three of you as people I wish I could model my business after. So thank you for sharing a bit of your time with us all. For those who need to reach out to Wendy Ryan, she's in Southport, Connecticut at William Ravis Real Estate, and I'm sure her information will be linked somehow when we send this back out to you guys. To those who want to reach Stephanie Ford, who is at Coldwell Banker in either Cambridge or Newton, depending on which day it is. We'll be able to connect you with Stephanie as well. And then for those who need to meet Robert Rutley, he's on Facebook all the time. You can find him all the time, but he's at Mott & Chase in the Mott & Chase Sotheby's International Realty in the downtown Providence office, right near the Amtrak station, if you've been there. And again, I look up to the three of you as great role models on how to do the business. And as Katie Clancy's just asked, we'll try to get the social media or contact information out for the three of you to everybody. So if they have questions, or more importantly, buyers or sellers crisscrossing each of your markets, they can reach out to you and connect with you all.
Yeah, and we will. Thank you guys for taking the time again. And everyone that's on, we'll send out this and the presentation as well afterwards, as always. And also, one thing I didn't mention before, if you haven't checked it out, our new resource directory on our website has all you need to know about several topics, 6 or 7 topics on there so far. We'll add another one every month. Right now, some of the most trending ones we have are social media advertising, fair housing, and realtor safety, since it is Realtor Safety Month. So those are some of the 3 resource directories to check out right there on our website.
All right. Well, thank you all. Have a great week. Again, if you're interested in the board, or you're interested in what's going on in our market, or if you've just got questions for us to address in our upcoming meetings, please reach out to us. You can reach Ryan at any time. You can reach me at any time. And again, thank you to our 3 panelists, 3 good friends of mine. And I hope to see you each in person at some point soon.
And thank you, Greg, so much for having us. I learned plenty as well. So it's always a good experience to be a part of this. So.
Yep. Thank you.
Thanks all.
Thank you.
Thank you.